What is going on? Welcome back to Financial Journey. So today is a shocker for Rivian. I want to go over some of the current data points, talk on what is causing all this and everything else you need to know. But first, make sure to hit that thumbs up and subscribe. Always greatly appreciate that. And with that said, let's get right to it. So I did do a video conveniently yesterday on some expectations for this week. So even aside from what just came out, Rivian was going into this week with more so a overbought status, as you can kind of tell on stochastic. So a lot of the technicals did need to pull back. So it is magnifying today's downtrend. Whether today is an overreaction or not, I'll break that down. But today there was news that did go over their Q4 numbers, and they didn't waste any time. So January the 2nd, they put out their Q4 numbers. In reality, they did exceed their production target. The deliveries was a little bit more of a miss, potentially, which does signal that there is maybe a demand issue. During the Q3 earnings, they were saying that we have so much demand. Actually, for the last several earnings, in fact, they've been saying that we have so much demand. But I feel like a lot of people in reality are kind of blowing this out of proportion. So based on Q4, they did 17,541 vehicles produced, 13,972 delivered. So they did exceed their target. So in 2023, they produced 57,000 and change, and their original target, I guess, was, or guidance was 54. In my opinion, I think today's sell-off is more to do with the technicals and just the broader market pulling back rather than this, even though this could be very much explained during their upcoming earnings, which is going to be on February the 21st. But still, as the market does like to do, it jumps to conclusions, it speculates. So right now it's speculating that there is bigger issues with Rivian as far as demand. So let me know your thoughts on that in the comments below. Going over some data points. So right now shorts are returning 378,000 shares. So the fact that it is selling off today and shorts are returning does signal that they feel like today is a overreaction. So it is kind of a bullish data point right now. 13.22% of the free float is being shorted. 88.7 million shares overall are being shorted, and cost per hour average is 0.86%. As I've said in the past, I don't see Rivian being a squeeze play whatsoever. Just bringing this up more as a benchmark. There oddly has already been one new analyst rating coming down the pipeline as a result of those recent numbers. So Jordan Levy does have a 32% success rating. So obviously take that with a grain of salt because it's not necessarily the best, but they did give a buy rating and a $26 price target. Anticipate a lot more analyst ratings the rest of this week as they try to digest what is happening in the broader market as well as these numbers. I just wanted to quickly play 1 minute of this, and it once again, it kind of puts it in perspective on as well what is happening with the broader market and why that is pulling back.
But Josh, do we agree with Cramer that in terms of, the mega caps, they were up so much? And you can love all the names. I mean, it's not like you're throwing shade on any of the names or the fundamentals behind it, but when an Apple's up near 50% and Microsoft near 60, Alphabet same, Amazon 80, Nvidia and Meta, as you know, up just astronomical gains of last year, are the multiples now, in his words, out of whack? Do you agree with that? And is it time to trim across the board?
You can't argue that Apple is cheap based on its own history. You can't. I don't hear any Apple bull saying the stock's cheap here. That's not the argument for owning it. The argument for owning it is you've got a ton of stability. You've got just insane, in dollar terms, amounts of cash flow. You've got the ability to buy back stock. And you have this wild card where when they launch the wearable, if it turns out that that's the dawn of a new era of hardware, maybe a lot of people who have been out of the name will have to take a second look at it. That's the bull case for Apple. The bear case is simple. It's a 30 trailing PE, a 27 forward PE. Look back over the last 10 years, it averages 18. So it is almost double its long-term average multiple, and it's really easy to make the case, to Weiss's point, hey, I don't owe the taxes anymore for last fiscal year, calendar rolls over, maybe I'll take some off today.
So yeah, ultimately they were focusing on a lot of the bigger names, but it can kind of be transferred over to almost any company, because if you are one of those individuals that likes to look at metrics and the multiples and whatever, like a lot of the stocks based on what they offer, whether it be PE or PS ratios, whatever floats your boat, all is relatively high. Same goes for the technicals. So I think that's what's causing a broader pullback. And I kind of found it very interesting at the very beginning on how they said, is Cramer right? Like normally it's inverse Cramer. It's kind of funny, but beside the point. Moving on from that though, going over options. So currently we're about to head into power hour within the next about 30 minutes of the trading day. $15 million in calls being purchased versus 10 million in puts. 56% of all the options activity so far today, sentiment wise, is bullish. Of the call options that are being purchased, there is a consensus that it is going to be above $22. And looking at the puts though, it is anticipated for it to be below $20. So more of a continuation of a downtrend. And like I mentioned over my video yesterday, if you are a big fan of the Elliott wave, it does actually have the pivot point being $21.11 or 10 cents right here. So technically we are below that. So if it can actually somehow regain itself and stay above that, then in theory, this is still going to hold out to be true. So anywhere between $28.60 and $30. If not, then you can anticipate between $17 and $18.60. So a continuation of a breakdown on the technicals. These are some of the transactions that have occurred on the secondary market above $100,000. So a lot of transactions, big money buying a Rivian, but again, sometimes you just can't fight with the broader market. Interestingly enough though, so this individual, if I played the rest, he does go on to say that the broader market as well is just going through a lot of rebalancing. I kind of do disagree with that, and that is because you can kind of tell right here, a lot of transactions that did occur on the 29th, which was the last trading day in 2023, that is where a lot of rebalancing did occur. You can kind of tell that based on all this. So especially Friday into a long weekend, like last day of the year, like that is normally quiet. But then again, you can kind of see a lot of transactions, and same goes across the board, right? So every stock had a abnormal amount of transactions occurring after hours. That was the rebalancing. So today isn't necessarily that, it's just a sell-off as a result of the technicals. And when it comes down to looking at some of the fib levels, with it currently at $20.87, it is right now between this S1 and this pivot. So 1851 is going to be that very strong support. So it kind of matches exactly what the Elliott wave does show as far as the high. 2157 is going to be that next strong resistance. So most likely it is just going to continue and stay within this range. It is a fairly wide gap, but like I said in yesterday's video, there's also a lot of data points coming out the rest of the week that could continue and help the broader market go up, or just completely obliterate any of the recent progress that has happened. So we'll just have to wait and see, but today does look like, in my opinion, a little bit more of an overreaction due to this. But what do I know? I'm not a financial advisor. You guys always do your own due diligence. Let me know your thoughts on Rivian. Did you buy today? Did you sell? I bought a little bit at $21 to be exact. I'm pretty happy with my purchase at Rivian because I do realize that bigger and better things will be coming. And I actually thought that today was like this news was okay. I think people are just jumping to conclusions that there is a demand issue, but we'll just have to wait until February the 21st for a better understanding of that. Let me know your thoughts. Don't forget to hit that thumbs up and subscribe. Always greatly appreciate that. One final thing, if you do like a lot of the Elliott wave analysis, analyst ratings, forecasts, everything under the sun, take a look at Interactive Brokers, link in the description below and also the comments for all this information to be completely free. Let me know your thoughts. Don't forget to hit that thumbs up, and I appreciate all of you watching.